You want to go fast? Go alone. You want to go far? Go together. Today, we're going to cover a credit building strategy that will allow you to accomplish speed and depth while working with a teammate, partner, family member, or spouse in the process. This credit building strategy is going to help you accomplish building a strong, deep, diverse profile, not just your credit score. We're also going to cover how your ecosystem that you're going to create is going to allow one individual success to be the success for the whole unit. We're going to cover all of that in this video. This is JP from Blueprint for Prosperity, helping you to increase your net worth through relationship banking, maximizing your borrowing capacity, proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your personal blueprint for prosperity. So with this strategy, what you're going to end up doing is you're going to partner with at least one trusted person, a spouse, mate, family member, close friend, someone that you can trust and that is on a similar journey with you and on a similar page with you financially now and you guys' long-term goals. This strategy is going to help you to effectively double your efforts while working on individual basis to do so. So what we're going to cover is where you need to go to do this, what type of accounts you need to do this, the speed, the time frame, and the calendar, the schedule you want to use in doing this, and the benefits that come with doing this. And we're also going to cover things to be aware of in this process to make sure it goes efficiently and smoothly and safely for both parties or whoever's involved. So the first thing that we're going to cover is where you need to go. What I recommend for this strategy is that you go to an institution that you and that person can jointly access on a regular basis that works for both parties. You're going to want to look for a regional, semi-local bank or credit union. But the key to this is that you need that bank or credit union to offer enough products for you to be able to stay in their ecosystem for the sake of congruency and simplicity. So what's an example of what I'm describing? You want an institution that has about 3 different credit cards that all have different tier levels. So maybe they'll have a secured credit card or a starter card. They'll have a mid-level card, maybe no annual fee, but a couple benefits, and then maybe like a premium card. At least 3 cards. Offers personal secured and unsecured loans. Offers auto loans, and also offers mortgages and ideally maybe even lot loans, depending on where you are, if land or lots are available for you to purchase. We're going to dig into why this is relevant a little bit later in the video. So the purpose of this is for you to be able to simplify where you're doing this putting this ecosystem together at. You don't want to spread this out amongst multiple institutions and complicate things, especially if you're starting out your financial journey or rebuilding your financial journey. So again, a small, somewhat regional, local, big enough institution that has multiple enough products, but small enough to where they appreciate you as a customer at an early phase and they're easily accessible. So what happens is you and that partner want to go into that institution and start a deposit relationship. Ideally, if you have the finances to combine, you want to do checking and savings. If both parties can put in their direct deposits from their jobs or respective work, that is ideal. You want to build up your checking account with direct deposits, and you ideally want to put a reasonable amount of reserve in your savings accounts. If you're at a reasonable to small size institution, it doesn't have to be a crazy amount. Maybe $1,000, $1,500 between, on that joint savings account or above, whatever you can provide will put you in a really good place in the eyes of that institution. So you want to start there. And again, if you can both set up direct deposits, even better. Once you have your deposit relationship established, maybe about 30 days or so after, you may not have to wait this long, but I just recommend it because it gives that institution a different layer of comfort when dealing with you if they've seen you bank at least for a month or two. So maybe 30 to 60 days in, you've got some deposits going in, you got some savings building up. You go in, you apply for that first credit card. Again, whether it's secured or unsecured, depending on where you are with your existing credit profile, if it's completely blank, then you may be able to get an unsecured card out of the gate, like an entry level. Or if you have some negative items or some older negative items here or there, you may have to go with a secured card option. It's very nuanced, people's perspective on secured credit cards. As a financial professional who works in the banking industry, I'm telling you that secured credit cards look great in most cases, depending on where they're coming from. In the eyes of lenders, they're great starting foundations to building your credit. So if a secured credit card is the route you have to go, check and see if it unsecures. Check and see if it requires a hard inquiry. If it unsecures, that's great. If it doesn't require a hard inquiry and you can put the money up, that's even better. But if you have to go through those things and that's your only option to get started, speed is important, time is important. So instead of waiting months or trying to find some backdoor strategy, just go for it. Get that first level card, and what you want to do is both parties go get the same card individually and add each other as authorized users on that card. So at this point in time, you've already basically established 2 accounts that you're on. You guys have effectively doubled each other's limits right out of the gate. So what you want to do is you do that first, and then at the 3-month mark, 90 days or so after having that first card, roughly 90 to 120 days, then you want to go up for the next tier card. At this point in time, again, assuming you don't have any immediate disqualifiers on your credit report, you should be eligible for that next level card at that point in time, maximum maybe 6 months out. Go and do the same strategy. Both parties get the card individually and then add each other as authorized users. Just that quick. Each party now has 4 trade lines on their report, all being paid properly, all healthy utilization. This is going to be a phenomenal stacking strategy. And of course, you're going to do the same thing with the third card, ideally somewhere between another 90 to 180 days from the last card. Do the same thing. Both parties get that third card and you add each other as authorized users. This is now 6 accounts per person on this profile, on each profile, stacking up, basically doubling you guys' limits, doubling you guys' spending power. If the cards get rewards points, you're also getting the benefits there, but sticking to the credit building portion of it. Now you're starting to show multiple different accounts, and you're doing it with congruency, because now ideally you guys are doing this at the same institution. You're on each other's accounts already. And maybe if this is a spousal situation or a family member, you guys may even be sharing personal information like addresses. The congruency counts with lenders. It counts on your credit profile. So this is even better. Now, once you've maxed out the credit card part of this strategy, you guys want to consult amongst yourselves and decide, hey, do we want to go get a vehicle together? Or are we going to try some couple personal loans together? Mortgage together? Are there lot loans available? You want to start diversifying with installment loans now with that same institution. So you want to make sense. You obviously don't want to go into debt for no reason. But if you're ready to buy a home, are you ready to invest in a lot for whatever reason? You're ready to buy a vehicle, or you're just not ready for any of those bigger moves and you just want to get personal loans. Do the same thing. You're looking to accomplish, at that point in time, you're looking to accomplish diversifying your credit profile with installment loans. With these installment loans, you're going to now give yourself another diverse mix, and you're going to add each other on as co-signers on that loan. So ideally, you both get a loan and you co-sign for each other. This again doubles the accounts and doubles the diversification on the credit profile and the payment history and so on and so forth. You want to continue to do this strategy on as many different products within that ecosystem as possible. And you want to make sure that all of these different loan products and credit line products ideally can reach the 2-year seasoning mark. Once you hit that benchmark of 2 years seasoning, you guys are going to have multiple accounts on your credit profile. And once they start to hit that 1-2 year mark and beyond, lenders can look on your credit profile and see you maintain these diverse pool of accounts responsibly. Now the world opens up for you. Your credit score at this point in time should be extremely sturdy. Your credit profile is thicker and sturdy. And you guys should be in a position where you individually now can go out and accomplish almost anything you want within means of your income, of course. From a credit perspective, you should be in pristine shape. The point of this is, again, to create an ecosystem. It's simplicity, but at the end of the day, for lenders, they're looking for that simplicity and straightforward, proper financial behavior and trends on your credit report and all other data points that they're pulling when they're considering you for loans and lines. And again, what this does is allows you to work within one institution max out the products and services they have available. This puts congruency into place. If you guys want to break this out, you have more trusted people around you, whether it's 3 of you or 4 of you, or you want to, master one institution and move on to the next one over the course of a handful of years. But as you can see, when you think about this, this is amazing scale. This strategy has great scale. This is piggybacking at its finest. And it doesn't have to worry about you having authorized users from strangers that you don't know, that you can't control what they're doing on their report. And you can't do anything about that information getting on your report and basically limiting, your ability to defend yourself if they do negative activity on that report. You're working with somebody you know and trust. You're working towards a common goal. And this is going to be a phenomenal opportunity for you to individually stack your credit score, but hopefully take family with you in the process or friends with you in the process. So I wanted to bring this to you as kind of like an ultimate piggybacking type of guide, co-signing. That's an effective way to do this strategy, because there's so many financial professionals and content creators that don't promote, piggybacking or co-signing because of the risk. Of course, there's risk. If any one of you don't pay your bills or defaults, or anything along those lines, it can take both parties down. This is why it's important to have someone you can trust during this process. But as you can see, if it works properly and both parties are trustworthy and working towards a common goal, it can be a phenomenal level of scale and depth that can reward you out for the rest of your lives financially. So I appreciated bringing you guys this content. Comment down below. Let me know if you've tried a strategy like this, or how, does this sound like it makes sense for you, or what tweaks you would make to this strategy. Let me know in the comments down below so we can continue this conversation. There's multiple ways to roll this strategy out. I just wanted to bring the format to you, and we'll continue to grow in different videos that covers this in different depth and different forms. As always, I want you guys to stay focused, stay in motion. I'm gonna see y'all soon.